Hi, in this episode, I'm interviewing Graham Donoghue, who is the CEO of Sykes Holiday Cottages. Sykes is one of the largest property management companies in the world. 15,500 properties in the UK alone on exclusive contract, plus 2,000 in New Zealand. We're going to talk about M&A, how has he managed to scale so quickly through M&A, also organic growth, how he gets 47% repeat guests and 85% of his customers come through his direct channel. He's going to tell us all about this, and you can digest this both on YouTube and on podcast. See you on the other side. Hi, Graham.
Hello. Morning.
Morning. Thanks so much for accepting to do this with me today. You are our third participant to the secret source of large property managers.
Wow.
So, thanks so much. So can you please tell us briefly what you were doing before Sykes Holiday Cottages and about your current position at Sykes?
Okay, so just before I joined Sykes, I was mowing the lawn. So I had a year, where I took time out. Prior to that, I used to run a business in the UK as a managing director called Money Supermarket. So it's a large, publicly traded price comparison business. So I ran that for 7 years as the MD, just before we IPO'd the business. And then prior to that, which is where I fell in love with travel, I used to run TUI's digital businesses all over Europe. When the internet was a small part of their business to a pretty large part of the business when I left. So, and then obviously at Sykes, my job is CEO. So mostly I spend all of my time unblocking blockages to allow us to grow, to be, big and successful, and spend a lot of time with our investors and a lot of time thinking about the business 3 to 5 years out from where we are today.
Okay, we'll come back to the 3 to 5 years because I'm very interested to find out where you're going with it. But meanwhile, maybe some of our listeners and viewers don't know what Sykes is. So maybe you could tell us about the brand and what you stand for and who your customers are.
Okay, so we're predominantly a UK-based business. So we have 15,500 properties in the UK that we exclusively manage. And we have 2,000 properties in New Zealand through a business we've acquired called Batchcare. So we're a property management service business, and I don't really like that sort of a phrase, but typically what we do for owners is provide them with lots of bookings and take the hassle away. And we do everything from full PMS through to cleaning, maintenance, whatever it may be, marketing services, etc. And typically we fill our properties better than most of our core competitors in the UK. So we often say it's about more bookings, less hassle, with exceptional service from a property owner point of view. And from a guest point of view, clearly it's having all the best accommodation that is looked after in the best locations across the UK and New Zealand and serviced well. We obsess over net promoter score here and sort of a data and continuous improvement. So matching owners and matching guests together to make them both very happy through the lens of NPS is what we do. And the business, obviously, when I started 3 years ago, we had 5,500 properties. So it gives you an idea of the growth that we've gone through over a sort of a three and a bit year period, mostly through organic, but also M&A has been important to us as well, which you can see on my wall. Every one of those little cards, Vanessa, is a business that we're tracking. Haven't yet bought, but we're tracking.
You're a busy man. Okay, so you touched on lots of things I actually want to go a little bit more in depth with. So first of all, you've been scaling massively. And can we safely say that you are the largest property manager in Europe?
No, not yet. No, we're getting there. We're getting there. So there's exclusivity is really important to us. So there is larger property managers that may not necessarily have all the properties that are exclusive. So, what's important to us is to make sure that we have the property exclusive and then we fill it as best as we possibly can. So we're not yet the largest in Europe, but we're working on it.
Good, I like it. And so we have some very big property managers in the US, right? And I've heard that they're eyeing up Europe. Is that a threat to Sykes?
Yeah, I mean, we track a lot of what's happening globally. I mean, we're tracking 20 odd million properties globally that are interesting to us. You know, we look at the US, Europe. I mean, the largest sort of property manager there, I guess, depending what happens with the Vacasa and the Wyndham acquisition, they will become the large property manager. But let's just say at the moment, 13,000 properties approximately. We're very different in terms of how we behave and operate. We're an 85% direct business. That is not how the model operates across the sort of the US. But in principle, we do a similar thing. We get properties, we look after them, we service them. There's more full service, as you know, in the US versus in the UK. We're more marketing, sales services with an element of full service afterwards. We talk to lots of people, we track lots of people. I'm equally as interested in acquiring or moving into the US, given the size of the market and the opportunity, because we think, I mean, you used the word magic at the beginning of your intro. We think what we do here is a bit of a secret sauce and magic, and we think that we can deploy that into other geographies, which is what we're testing with New Zealand and soon Australia, and equally we think it'll work in the US. So I guess we'll watch and see what happens.
Okay, that's great, because this leads me into scaling, right? So all of these post-its you have at the back, there's a flag, there's a UK flag. Are these all in the UK?
You can't see the whole wall. So what we tend to sort of look for is, we've done a lot of work market mapping out all geographies, trying to understand what does the landscape look like, and where can we add value. And we look at it either through the lens of, is there some interesting businesses to acquire? And we can deploy our technology and our thinking and our way of operating. Because when you look at what we do here, it's the combination of technology, but also with service, people, and this operational rigor, this operational continuous improvement way that we act and behave, plus all of the tech, as I said. That's what we want to sort of try and add value to other organizations and other geographies. So you can't see the whole wall, but it sort of carries on. There's other geographies, there's other flags, and we're sort of tracking lots of different things just to keep an eye on it, to understand what we do and where we go. In a controlled way, because there's catalog of sort of businesses that have tried to extend themselves too fast, too quickly, and haven't done it in a controlled way. We're growing very fast, but we also make a lot of money. And we're very profitable as a business with high operating margins as well, because we're private equity owned and we have to deliver a return for our investors. So it's important to make sure we do it in a controlled, measured way.
How much investment have you had?
Well, the original investment we had was 2015, where a business called Living Bridge, a mid-market PE house, acquired a business for 54 million. But since then, we've had a lot more investment to sort of grow the business. We haven't disclosed the figure, but it's a lot. But as I said, we're very profitable.
Okay, and so about these property management companies that you're acquiring, are they their own entities? Do they remain their own entities, or do they come into the fold? Are they able to tap into tech? They tap into people. They tap into all of your knowledge, right?
That's exactly right. Yeah. So what we're very careful is what we're actually buying here is almost like an annuity stream from the property owners. So we have to make sure we look after and protect the property. The fuel for our business is stock. It's great accommodation, and that's why we want it exclusively. Great accommodation in great location. So we've got to make sure we protect it. So there's a reason why property owners have decided to use a local property manager, and that's quite often different from using a large national scale player. So we hold on to the brand. We hold on to quite often the people that are facing out to the owners. But what we do is we provide them with all of our technology. So we provide them with our property management application called Enterprise. We provide them with a revenue management application called Prism. We provide them with our leveraged customer base that we have. So we over-index in the demand side of what we do intentionally through all of our digital market acquisition. So as a property owner, your property still remains on the existing website. We just build a new one that's hopefully better. But you also appear on Sykes as well. But it's all controlled from a single sort of engine. But everybody, if you still wanted to go down to your local office and meet the individual who you've spoken to for 20 odd years, that person typically will still be there and will look after you. But you get more bookings if you want more bookings as a property owner. And that seems to have done well. We've done it 11 times in the last 18 months. And every single acquisition that we've made, we have significantly increased the bookings for the individual owners. Now, not all owners want more bookings, believe it or not. Some owners just want, more service, or some owners want, more rate from less bookings, and we can do both. So it's important that we understand that.
Great proposition. So is there also a proposition on the side for acquiring owners directly into Sykes, or is it everything? Yeah. There is as well. Okay.
Yeah, no, exactly. So, this business is not grown through M&A. Originally, it wasn't about M&A growth. It was about organic growth. So we're growing actually faster organically than we are through sort of M&A. So we deal with about 22,000 leads a year organically coming into the business, and then we score those leads and we visit and inspect 10,000 properties to check whether they're right, and then we put live a lot of them.
Wow, I wish I had that challenge. 22,000 leads, great. Okay, so with all these acquisitions...
Big marketing budgets as well, Vanessa.
I'm in the wrong business, honestly. Yeah. With all these acquisitions and all these different cottages all over, how does brand and consistency work between all of these properties? Is it important for a brand like yours to have a strong brand for the guest? That is, so the guest comes in, will he recognize one cottage from another being a Sykes cottage? How does that work?
It's a good question. It's I'd say it's work in progress is the honest answer. I mean, I think consistency of experience is really important, but all these properties are unique and individual, and it's quite difficult to control it. And part of the character sometimes is the fact that they're all different and unique. But I think every property should be well maintained. Every property should be well cleaned. Every property should have a minimum standard of facilities. And clearly, the higher the rating, so we do rate our properties in terms of grading, and the higher the grading of the property, the more facilities. So if you go on a 5-graded property in Cornwall, let's just say, you should expect that if you go to a 5-graded property in Scotland, it has similar features. And so we spend a lot of time working with our owners to make sure they understand that. But every single guest that goes on holiday with us, we ask them to complete a feedback form, typically the day they come home. And we get about 100,000 responses a year, to give you an idea of the scale. And every single piece of feedback is followed up. Whether you're a positive promoter or whether you're a detractor, we follow it up to understand how we can learn from it and how do we make it better. And we focus very much on the detractors, because then that's about working with the property owner themselves, or if it's our own managed service, it's trying to make it better if something's gone wrong, and then always trying to do the right thing. So that is about, to me, that is your brand. You have to earn the right to, have a brand that's trusted and respected. And we measure it also through repeat booking rate. So 47% of our guests have traveled with us before. And that's been growing, about 13 to 15% every year for the last 3 years or so. And for me, that's one of the best measures of sort of a brand sort of a loyalty. I think one of the challenges we have is, yes, I'd love every single property to have a Sykes plaque outside of the property and to feel like you're in a Sykes out of a property, but it is really hard to do that at scale. So I think, we very much focus on, the basics in terms of, well maintained, clean, et cetera, et cetera.
Okay. And so you mentioned your holiday guests. So is it mainly a holiday business? Is there also a bit of business in there, business travel? Do you do cities? It's all villas as such.
Yeah, I mean, it's all, we call them cottages, but, we have everything from castles to, lighthouses to, 1-bedroom apartments, large homes, whatever. We very much focus on the rural destinations. I don't want to go head to head and compete in London, Manchester, big cities with Airbnb, Booking.com or whoever, because actually they're probably better at it. That's not core to what we do. So we're very much leisure focused, and it is very much mostly holidays. Undoubtedly, there'll be the odd bit of business travel in there. We focus on historic cities as well, but our average length of stay is 6 nights. So, I mean, that gives you an idea. And 35%, I think it is, of every booking we do, there's a pet involved. So, you know, these are people going on holidays. But what people are doing in the UK, and I think this is happening all over, is people are taking more short breaks. So the length of stay actually has come down over the years. And it's coming down all the time as people are sort of, you know, doing your Friday, Monday, Friday, etc.
Mm-hmm.
They're very much leisure focused.
So how is your base going to react to that? Are you trying to tell them to only also accept 2 nights, or are they focused on accepting longer?
Yeah, so we do. So we do probably 2.5 million plus price changes a year. You know, the way that our systems are sort of set up, it's about trying to maximize the opportunity for the owner, but also balance it with what the guests are looking for in terms of fair value and price. So we do have a minimum 2-night stay. Okay. We don't allow 1 night. But I won't go into the ins and outs of how we price. It's not straightforward. 3 years ago, we had a brochure, and it was 52-week pricing, and it was printed out, and it was very vanilla. Now, basically, pricing is completely dynamic, and whether you go on a Friday to a Monday or a Monday to Friday, the price alters all the time. And what we do is we take all of our properties and we build it into 250 different pace curves for occupancy and rate. And then we track against that at each individual property. And then we're looking for deviation from that through, you know, pricing and yield optimization. So we have a team of 14 people in our pricing and yielding team who every day are, I guess, nudging the pricing accordingly. It's a balance, because, you know, what we're very cognizant of is, you know, as a property, as an owner of a property, as an individual, if you have 2 short breaks in a week, you have 2 changeovers. There's a cost. Yeah. So we have to be able to cover that. So there's things like minimum price, minimum floor. You know, we charge different rates when you're within 7 nights. Quite often we'll try and get 150% of the 7-night price if you're doing 2 short breaks. Quite sophisticated, and we built that model ourselves over the last sort of 2 or 3 years.
So you talked about revenue management and these 14 people doing this. You've been made one of the top 100 companies to work for in the UK. Congratulations this year.
Thank you.
And so you have 500 people in HQ, I heard. And so I was wondering, is it difficult to employ for a property manager like you? And do most of them have a hotel background? How do you employ to get the talents?
Well, first of all, I mean, thank you. I mean, it is one of those awards that you know, we're delighted to sort of pick up. We spend an obscene amount of time making sure this is a phenomenal company to work for. So when we look at, and it's not necessarily all through pay, but we spend a lot of time focusing on being an employer of choice and making sure that we look after all of the employees as well. So we actually have 650 people in the group. 500, you're right, are in this building here now. We then have about 200 people on top of that are self-employed. We've become almost you know, an employer of choice, which is great. So people want to come to work for us. There's a job we're recruiting for at the moment, and we have 34 CVs for the one job, and people are coming direct to us as well. And we make it a fun environment here. So, you know, if you follow us on LinkedIn or anything, you'll see it's pretty good fun here. You know, there's beer trolleys on a Friday. There's yoga, Pilates, reflexology. You know, we really do look after the employees. But if you look at the makeup of the people we have here, we are a very much a tech-driven business. So we have almost 100 engineers. And I would say most of the growth that we have in our business is actually coming through data and engineering roles. Operational functions just scale as we sort of take more and more sort of people on holiday. But hiring sort of a talent and making sure that they can work on pretty cool, interesting things is really important. And I often find that, you know, if it's cool and interesting, it's a great environment, people want to work for you.
Yeah, absolutely. Well, 100 programmers, that's a lot. And you, so can we come on to technology? In fact, you mentioned that you build a PMS, you own proprietary PMS, you own yield manager. Mm-hmm. And what else have you built, and what are you outsourcing?
Office 365. we don't. Yeah, I mean, I'm very fortunate here that the team, and I inherited a lot of this. The team really are very much data-driven, technology-focused, and it's about how does the technology enable awesome service and make it easy for people to do the job. So, and we think of this business in sort of a four quadrants. There's portfolio optimization. How do you optimize a portfolio? There's marketing sort of optimization. How do you digitally optimize the marketing portfolio? There's income maximization through sort of a rate and so forth. And then there's almost like guest experience optimization. And each one of those sort of a quadrants, I think of this business like if you imagine a big flywheel where you're just pulling all of this stuff in the right direction, how do we use technology and people to deliver EBITDA? And so what have we built ourselves? So we built our own PMS, we built our own revenue management system, we built our own daily reforecasting system as well. So every day we reforecast the business to develop curves for basically rate of sale. And then the teams visually have an app where they can look at whether they're on track or off track by hour. And then they can choose to pull either the pricing lever or the paid performance lever or the conversion rate optimization lever through the CRO team. We've built our own CRO platform called Aristotle, where we're running thousands of A/B tests across the website daily, looking to improve the conversion. And that works across our app or smartphone or tablet, desktop projects, or even search. We have built a tool called Market IQ, and that's where we track every single property in the UK that we think is interesting to us as an opportunity. Because we have 15,500 properties in the UK, but there's a lot more than 15,500 properties we would like. So what do we know about those properties? Have we had a lead? Are we tracking it? Are we talking to the owner? Who are they with today? How could we nudge them? Are they going directly as an RBO or are they through a PMS? And I'm sure there's a whole bunch of other things I forgot. But one of the other things we've developed is this tool called net contribution. So what we do is every time we spend money on marketing, we give it a cost through the digital experience online as it's taking an eyeball, an opportunity. And then we net that off against a conversion at a property level. And then we every single property has its own net margin. And then we're trying to identify ones that make us more money and feed that into our toolkit for ongoing property recruitment. Because every property out of the 22,000 leads, when they come into the business, we score them to give them a value, to work out how attractive they are, because not all properties are equal. And we look at that through the net margin and the opportunity as well. I mean, the list goes on. It's all really data driven, and that's the thing. It's all about how we use data into insight, then how we into action. And each one of our departments has analysts embedded within it, be it the finance team, the marketing team, the operational team, the property recruitment team. It's data together with analysts working at the power of two to create a commercial improvement. And we set the whole business up that way. So when you walk around this business, it flows like that as well.
That's so impressive, Graham. Wow. And you set all this up in the last 3 years? There's 195 people when I joined. So we've hired a lot of people, but it's, as I said, my job at the beginning is just to break down sort of the barriers that exist and set the vision and hire people who are smarter than me. If you hire people who are smarter than you, they make you look good. It's always quite good. Very good. So we talked about direct. Well, let's talk a little bit about marketing. You said that 85% of your bookings come from the direct channel, correct? So the 15 others, where do they come from?
So we have about 750 partners that we work with, and they represent that proportion. At the moment, it's actually closer to about 20% of the volume, and I'll explain why in a second. We break it down into two groups. There's sort of a partnerships where we power the website, or we have affiliate deals. So, national parks in the UK, there's 15 national parks. We work with them, various different charitable organizations. And then we use the aggregators or the OTAs in quite a controlled way. So Booking.com is our single biggest partner we work with, and we don't really work with Airbnb much. It's probably maybe 1% of our sales if that. Booking.com we work with slightly more aggressively because Booking.com we find are very good for bringing in international customers. So we're mostly domestic here in the UK. Even in New Zealand, 90% of what we do is sort of a domestic. But we use Booking.com to bring in international customers because to me, they're incremental. They're not customers we're fighting for in the UK. So our business in Ireland, we have Booking.com, bring a lot of people from the US into Ireland. Also, we bring a lot of people from Germany and from Southeast Asia into the Lake District and so forth as well. So quite a controlled way, but we call it a switchboard here. Not all properties appear all the time on all the channels, and we sort of pick and choose how we do that. And if I'm honest, it's my inherent sort of a fear of disintermediation in the future. Some of these businesses, they're phenomenal. They're big sort of a monsters in terms of how they behave and sort of operate. And we work with them, but it's in a very much a controlled way. And that's how we run the business. We're very fortunate that we don't have to. We don't need that volume. So again, if you go to the US, as I'm sure you know, most of the large PMSs in the US in particular, the best is maybe 30% direct, and that's pushing it. And most of the volume comes from your Airbnbs or your VRBOs or whatever it may be. And that works for them, but it's a different model we have here.
But you think it's sustainable then, given that these giants are becoming more and more powerful? Do you think it's sustainable?
So far, yeah. Who knows in the future? I think the models are all evolving, as I'm sure you know. Commission rates are all sort of evolving. Guest fees are being blended out. We continue to, if you look at our cost per acquisition, despite doing over 400,000 plus bookings this year, our cost per acquisition has actually dropped. So I would say, if anything, we're getting better at how we think of all the marketing acquisition channels and how we control that. Clearly, if you deliver great service and you have rebook rate and you have really good CRM tools and you have loyalty programs, getting more people to sort of come direct. And I think it's also about how you control the stock, because we have the properties exclusively and they're only available here direct, we're sort of controlling that lever. I think if it was a free-for-all and we sort of let every property be available everywhere, you may lose control. So I guess, we should wait and see. But, I don't want to call them evil, because I think that's disrespectful, but it's very much, we use it in a controlled way.
Okay. So you're not eyeing up any niche channels that you want to work with travel trends changing. There's no niche out there that you'd like to maybe try out, maybe for your expansion in New Zealand. Are you looking at different channels that could potentially help you? No.
Not at the moment.
Okay.
However, again, I'm not naive enough to know. Let's just say that we did some work in the US and we decided that the US was interesting. How do we enter the US? Well, you either go and buy something. And that's quite challenging in the US to buy everything at scale because a couple of reasons. One, none of them make any money, as far as I'm aware, unless someone can correct me. And then how they're valued, I think, is quite challenging as well, some of these businesses, and that's just their top line growth versus bottom line growth. And the way consumers behave and operate in the US in terms of how they search for the product is very different as well. They're preconditioned almost to sort of use an intermediary in some way, shape or form. So I think every country has a different entry strategy. Even back in the UK, we do have some challenges. If you look at Scotland as an example, so we only have 850 properties in Scotland, but yeah, I have huge amounts of demand that we've generated organically through our platforms. So, I think there's opportunities for us to work with some property managers or, some middleware organizations, let's just say, to syndicate in some non-exclusive content or non-exclusive properties in regions where we have huge amounts of demand, because at the moment it's almost a waste because we're just sort of letting our customers down when they're coming to the website because we haven't got the stock. But I'm always fearful of cannibalization and almost internal disintermediation as well. So it's how you do it in a controlled way.
So you might become a competitor to the big OTAs then. I should look at it the other way around.
No, they're too big and scary. We know what we're good at. We know what we're not good at as well.
So I was going to ask you why you're not working with Rentals United yet, but now I see that maybe it's not quite on the cards to do channel management. And
If you've got if you've got, I don't know, what would we have to have probably, if you've got 1 to 2,000 properties in Scotland that we think are interesting, then that's the type of thing that we would look at with a platform like yourselves. But outside of that, at the moment, we don't need to. We do work with some channel managers to help us in various different ways. And I know some of our regional brands that we've acquired have actually worked with you guys sort of in the past, and you have a very good reputation. But it's purely because at the moment we don't need to. We're at a different scale from most people.
Got you. Okay, so let's talk last questions before we do a quick true false. I wanted to talk to you about your predictions and where your business is going to be between in the next 3 to 5 years. You said you have goals already set up, so it'd be great if you share them with us.
So look, I think there's going to be lots of consolidation happening across our sector. It's already happening. And we're a private equity-owned business. So what does that mean? That means eventually there'll be other investors that are required. So we're on that sort of a journey. And for us, it's really about making sure we work with the right partners moving forward. So I think, consolidation is happening. We will drive some of that inevitably. Genuinely, we are looking for good quality businesses across the world that we can fold into our platform, we can add value to as well. So that is a big part of our agenda. And as I said, you can't see every flag on my wall here, but it doesn't just stop at the UK, Australia, and sort of New Zealand. So, so that's interesting. And it's all going to be about stock. It's all going to be about, properties. I tend to look at our business through the sort of the lens of, how many properties do we need by when? And where can we get those properties? And then where can we add value? So I would predict, not a gambling man, but we will probably double our business over the next 3 years, and we'll double our business through that lens of stock. So that means that we'll have somewhere between 35 and 40,000 properties, and we'll be taking 3 million people on holiday and probably employing about 1,100, 1,200 people, and hopefully be doing it very profitably as well.
I think you might take me on holiday next year. Sounds very good. But so with consolidation, that means that smaller player will have a much harder time to get in, right? As the market is maturing, do you see that? Do you see that as a negative that smaller players can't get in? Is it bad for the guests that there's so much consolidation?
Well, look, I think it can be a challenge if you're most of the businesses we're working with for acquiring, the family-owned businesses, they've been trading, 25 to 30 years, and it is getting tougher. So, thankfully, I would like to think we're sympathetic to that. So at the moment, if you look at the values that are being paid for a lot of, good quality businesses, they're high. So in a way, it's a nice exit strategy for some of these businesses, and quite often we will either hold on to a founder, or certainly we'll hold on to most of the employees, because most of these businesses are run on 10 people, 15 people, maybe even slightly larger. So the synergies don't come from people, they really come from delivering more bookings, and sort of leveraging what they have. So is it a good thing or is it a bad thing for the guests? I think ultimately it's a good thing, because providing obviously it's done a sympathetic way, and providing obviously the services are maintained and in some cases professionalized, because we can do things here that other people can't do. We have a team of 40 people that are constantly talking to guests, talking to owners, and they're trying to do the right thing. We always look at EBITDA profit secondary. We always believe that if we do the right thing to deliver exceptional service, but maintain that local brand, then it's a good outcome. But that's just us. Not every business behaves and operates in sort of the same way. But I do genuinely think it is inevitable that the smaller players, there's going to be the larger players are going to get larger, the smaller players are going to get smaller, and that's just the sort of a trend that's happening.
Yeah, we see that in every industry when consolidation starts happening, sadly. And so let's quickly do a true and false because I'm taking too much of the time.
Okay.
So I'm just going to say a sentence.
Game show this.
Yeah, it's like a game show.
They get a prize.
Yeah, I'll come and visit you in your office. That's the prize.
Yeah.
I'm just going to say a sentence and you just say true or false. Yeah?
Okay.
3, 2, 1. Vacation rental will topple the hotel industry next year.
True.
Voice-activated travel assistants are a must.
True.
Google will become the only OTA.
False.
Consolidation in the tech industry is bad for property managers.
False. It's a bit controversial.
Consolidation of property management companies is bad for guests.
False.
Vacation rental growth in urban areas will continue despite regulations.
True.
You have to invest in technology because guests' needs are changing.
True.
Keyless locks are a must.
False.
US property management brands will have a hard time implementing in Europe.
True.
When space travel becomes available, you'll scale into lunar territory.
I love Elon Musk. True. I drive a Tesla.
On the moon. Oh, you drive a Tesla now?
Yeah.
Very good.
And voice technology, whether it be in the property or just the user, I mean, I think that as a game changer, most definitely. We're investing a lot of time and energy into how we can utilize voice and search better.
I did see a little video that you posted, which I thought was really impressive.
Yeah.
Well, thanks so much. It's been wonderful talking to you. A lot of information that I hope will help our listeners and our viewers to grow their own business. So thank you so much.
Okay.
Take care.
Pleasure. Thanks, Vanessa. Cheers.
Bye-bye. Bye.
Bye.